All right, team, we're live. It is Wednesday. Happy hump day to you. Very interesting things going on today. Really ugly day today. Ugly day. I've had trouble with this microphone today, so let me know if you hear any issues. I restarted my computer, did the whole business. Just give me a shout in the live chat if there's anything wrong with my microphone. So, we've had a very interesting day. We're going to start with rates. Let me get through disclosures here. Derrick Evans. I'm a mortgage guy, VA home loan specialist, NMLS 155010. Give me a call or text or an email if you want to buy or refi, or if you just want to save some money, don't want to pay lender fees, don't want to deal with all the BS out there. That's what we do. Okay, let's take a look at mortgage rates here. And so we had this run. Remember, I said, hey, our best bet would be that we get this high, right? Well, we broke through that on Monday. It was really surprising. I thought for sure we were going to get rejection. So I was saying, hey, we're going to get rejection here. Lock. And then yesterday, amazingly, we made it all the way up to this prior support level here, which was truly a miracle. Really did not expect to get all the way up there. But clearly, there's geopolitical issues going on. There's people are trying to find safe havens to put their money in. Certain stocks, certain exchanges getting absolutely massacred. So there's things going on that aren't on the surface level that you're not seeing in like the indices, which were up today in kind of a big way. I mean, 600 points in the Dow, 80 in the S&P. Remember what I said? I said it on TV, and then I also said it here. We have to expect volatility, which means big down days, big up days. What's really interesting, actually here, let me pull this up. I've saved this. Sorry, get a look at my desktop here. There is essentially a decoupling that's taking place. All right, not going to work for me. And this decoupling between Bitcoin's in the orange, and the indices, the stock indices, has been really significant lately. This is something that is interesting for a number of reasons, because a lot of people believe that Bitcoin is like a safe haven opportunity, more like gold. Well, we saw today markets were up big. Oil, $112 for oil. Our price target was $100. The day Joe Biden got elected, we said, okay, we're getting into this trade. I sold at 90. I told you I might be selling early. That's okay. I'd rather sell too early than too late. I thought we were going to have a lot more downward pressure here in the economic circumstances, but we are not seeing that. Inflation is stronger than some of the weakness that we're seeing in some of these areas. So $112 for oil, guys. The oil trade has been the trade that I've made the most money with over the years. I'm going to talk to you more about that in a second. Let's come back. Okay, so we just kind of see all this stuff's going wild. Gold up a little bit, still over $1,900. Bitcoin today, pretty flat, which, again, I think this is good. If you're a Bitcoiner, that's good. It's flat today, and stocks were up. Yesterday stocks were down, Bitcoin was up. So it's decoupling. It's no longer flowing right with the stock market, which if you expect Bitcoin to go up, my big prediction for this year, remember, was that stock market crashes, money flies into Bitcoin, Bitcoin soars. If the stock market's getting a hit and Bitcoin's going up, everyone's going to get in. And I think that's what's going to take Bitcoin to 100 grand, but we'll see. We'll see about that. So if we look back here, okay, so this is what's going on. Crypto went through all that. Okay, today we lost 102 basis points. It was bad. Okay, let's just, all right, I'm trying to sugarcoat it. I shouldn't. We lost 102 basis points today. It was bad. I quoted someone yesterday on a high balance VA loan, 3% is what it was. No points, no fees, 3%. Good credit. Today, he got into contract. The best we could get him was 3.5%. So 0.5%. Rates went up by 0.5% in one day. What I want to talk about today is rate lock strategy. Yes, we're going to get to the Fed. The Fed really caused this. When it comes down to it, the Fed was really the issue here. But the Fed basically came out and said, "Hey, we're gonna cut a quarter, or we're gonna raise a quarter," and the market was kind of expecting 0.5%. We said, "Well, wait a minute, they're raising rates. That's deflationary, right? So that should be good for bonds." Yeah, but the bond market had priced in 0.5%. So the bond market prices in 0.5%. The Fed only raises 0.25%. That's not as deflationary as 0.5%. So that's what you're seeing play out here. Yesterday, this is all about rate lock strategy, by the way. All about rate lock strategy. That is the thing that is the most crucial right now for if you're a buyer, if you're a refier, is your loan officer paying attention to this stuff. I relocked 4 loans yesterday on this spike and saved 4 people money. Multiple were purchases, multiple were refis, 2 and 2. And that's just opportunity knocking right there. Go and grab that money for them. That was between 0.25% and 0.5% knocked off for those clients. So what is your rate lock strategy? What are you doing? Right now, we're locking people as soon as we can. As soon as we have the opportunity, we're locking them to hedge against the market. If this thing just dies, I don't want to be caught holding the bag. I don't want to be caught sitting here saying, oh, well, we didn't lock it yesterday and we should have. Never. No, we'll lock it. If rates get better, we'll flip it to a different bank. Got to have a rate lock strategy here. There's no cost to lock a loan. There's no cost to do an application. Do not get yourself caught up missing this because of a fear of something that doesn't exist. So whether you use me or not, doesn't matter. I mean, obviously I prefer use me, but use whoever and just do it the right way. Okay? Do it the right way. Make sure that you aren't afraid to get an application in, get locked in, and be prepared for the market to be volatile. Rates will go up. Rates will go down. I never expected this. I've been telling people for weeks, we're going to lock you in. If rates get better, which I don't think is going to happen, we'll capture it. And that's exactly what we did. So today was, that was today. So we lost 102 basis points and it was ugly. For the most part of the day, the majority of the day, rates were frozen. You couldn't even lock because everyone was waiting to reprice, waiting to see what was happening, waiting to see when the bottom was going to fall out of. I mean, we were at one point here, I think we were down 120 something. So we did have a little bit of bounce back off of that. And remember, that's the old range that we bounced off of, that old resistance line and this old range. And I kind of expect us to get back into revisiting this little range right here. And that's okay. We're okay. We can be okay right there. What we don't want to see is we don't want to see this go below 100. Right now we're at 100.59. So we got 59 basis points between here and that 100-point mark. So there could still be more pain between here and there, but at least we have that going for us to some extent. So rate lock strategy is the key right now. Let me know if you can hear me okay. I've had trouble with my mic today. Okay, good. So rate lock strategy. Today rates went up after going down. It was brutal. Perhaps banks overreacted a little bit. What did the Fed chair say today? He noted highly uncertain Ukraine impact, but says rate hikes are still coming. So he said, hey, listen, we still have to hike rates because inflation's insane. The price of oil is insane. I'm going to talk about the oil trade in a second because that's going to set up for the other direction. I'm going to tell you how I made all the money at the oil trade and how it's setting up for another trade right now. So that's going to be fun stuff in just a second. If I had any brains at all, that'd be the only thing I did was that oil trade for my whole life. It's been so amazing. So Fed Chair Jerome Powell said Wednesday he sees interest rate hikes ahead, though he noted the implications for the U.S. economy are highly uncertain from the Ukraine war, obviously. Powell called the labor market extremely tight and said inflation has risen well above the Fed's 2% target. Is that what we call 7-something% on paper? Well above. His remarks are part of the mandatory appearances this week before House and Senate committees in Congress. So, rates, they have to raise rates. And it's not a bad thing. And it's okay if they want to do it slowly. They just should have started it sooner. The only problem with doing it slowly now is you waited too long to begin. That's the problem. That's why we got hit today. We wouldn't have got hit so hard today if they'd started this a year ago, but it is what it is, and this is where we are. All right, so let's talk about the oil trade real quick, and then I'm going to run. Thank you, sir. Thank you for the confirmation. Let's see. Let me get myself out of here. I wore a green shirt today. I was trying, guys. Okay, so the oil trade. So my favorite trade, and this is not financial advice or whatever. I'm just sharing stories about what I do, what I've done. And so the oil trade is this. Whenever people are talking about how cheap gas is, you buy it. You buy oil. Whenever you hear people in the news talking about how expensive gas is, you sell it. That was the easiest trade of my life. And I've probably had since 2000 and I think it was 2008 or 9 when we first saw the really big spike. No. It was like 10 or 11. And that was the first time that I started to implement this simple trade concept. And it's worked really, really well. The reason I didn't buy oil for so long was because when Trump was in office, it was very clear that they were going to keep oil prices low. It was very clear. We're making a lot of it here. Gas prices were low and everyone was talking about how low gas prices were, but there was really no catalyst for it to go higher. It didn't seem like there was any possible way for it to go up. So I just kind of went dormant on it until the election. There was a lot of stuff with the election fraud and whatnot, and so we weren't quite sure for a while. And then when Trump said, okay, peaceful transition is coming, that's when I bought it. And then we sold it at 90. So we were a little early on it. Now, back when Obama was in office and gas prices went crazy, let's see. Oh, it says highest since 2011. So it was probably 2011, 2012. Remember, we saw $140. So that could be coming. Now, if that comes, if $140 comes, or even 130, I'm probably going to start looking at this actually really soon. I like to trade the USO with this investment because it's just easy. And so you see today, 5%. This tracks oil pretty well on a percentage basis. And you can see here, look at this. Bananas, right? Look at this. That's 1 year right there. So we bought it at 45 back here somewhere. Or it was actually before that. It was a couple months before that. Can I zoom that? There we go. Yeah, this is back in here. So it was in the... Oh, this must be adjusted for something. So it was like back here. They may have had a split or something on this, but anyhow, or maybe my cost basis was 45. I just remember it being 45 when we got in, or maybe that's when I announced it on the channel. Either way, we sold at 90. This is it was 45 on the crude oil, not on the USO. My bad. I just got confused. So we bought it back here. The USO was pretty low. I actually remember one of the times I bought the USO, it was like $8. I bought it for $8 and we sold it for like 30 something and bought a ton of it. Now look what's happening. See it spiking here? So we're going to be looking at options chains. Now I promised a few different people, we're going to talk about options, how to place a bet on options. And this is going to be the one that we're going to use. So in the coming days, it could be in the coming days, it could be in the coming weeks, it could be in the coming months, but in the coming days, we're going to look at options on this to buy puts and bet against oil. We're going to have to kind of see what happens. Don't want to do this too soon, but it's something I'll probably average into. And my guess is that we're going to see oil spike up pretty darn hard. And then you're going to start to see a lot of action is going to have to take place. When we get $7, gas here, that causes a ruckus. Okay. That ruckus ripples up through representatives and action's going to happen, whether it's release of reserves, whether it's cutting a deal here, cutting a deal there, reopening a pipeline that was closed immediately on day one of Joe Biden's presidency, which is completely ridiculous and stupid. One of those things is going to happen. Maybe many of those things will happen, and you're going to see oil come in quite a bit. This is not happening yet. Don't do this. Don't do anything with this yet. It's not financial advice. I'm just telling you what I'm going to do. You want to follow along? Great. But we'll see. The oil trade has been amazing for me, and I'm going to get back into it. Now, what are we looking at for rates? I'm expecting, to have the exact same strategy right now. Lock immediately, be prepared, hedge, flip banks if need be. One of the beauties of being a broker. Expect rates to go higher, though. Remember that. Just because we got a few days of reprieve, we had a little vacation here. We had 3 big, beautiful green days. Beautiful. But then we got crushed today. And this is what I mean by volatility. Also, just looking at the stock indices, look how much they've been up and down lately. When the markets become more volatile, that is usually a setup for something that's coming. I believe that it's going to be a serious pullback in stocks, but I do think that the top really isn't going to be in stocks until the reopening is announced. Once the reopening is announced, the wiping all of the COVID stuff away everywhere nationally, when you don't have to wear a mask on a plane anymore, that is going to be the top, in my opinion. So we'll wait for that. That'll kind of give us a signal on stocks. I think that's going to be the best news that you can get probably for stocks. So remember how whales trade. Whales trade on when the best news comes out, that's when they're selling because there's liquidity there from, people, retail. And so that's when they'll exit. And the same thing, like you noticed when the invasion happened in Ukraine, that was terrible. That was scary. Markets open low, bought up. Those are whales buying. Okay, so I think there's more legs to this thing, higher. And then I think at some point a reopening is going to be announced nationwide, a complete relax of COVID levels. You're starting to see that getting unwound right now for a number of different reasons. That's going to be the top. So we're going to keep a close eye on that. If we can get down days in stocks, that actually will help bonds. As you noticed the last few days, that has been a good thing. But If stocks are going to run here for a minute before that happens, what does that mean? Probably going to be higher rates. So everyone just be careful. Take a look at what you've got. If you want a good comparison, if you're not sure if you're getting a good deal or not, reach out to me. That's what I'm here for. I will make sure you're getting a good deal. We'll make sure you're not paying any lender fees. We'll make sure that you're getting a great rate. And, if you already are, great. If you're not, we'll hook you up. But be very careful right here. Things can change, and they can change quickly. So be fast. Be fast, especially to the buyers and refis out there. Be quick. Don't wait 3 hours to get back to your loan officer about whether you want to lock the loan or not. Loan officers, I wouldn't even wait for permission. Lock it. Okay? You can apologize later if you have to. All right? That's it for today, guys. Hope that's helpful. Share this with your friends. Help make them smarter than everyone else. And I will see you all soon.